Thanks for being with us, everyone. Great to be back here. Investor Inspiration always puts on a great event, and I'm always happy to take part. And today, I want to talk about dominated earnings season. We just kicked off a new earnings season, and I think it's a fantastic time to go over a few strategies that you can use during earnings season. So that's what I'd like to share with you today. So let's get started. A bit about myself and Trading Winds here. I'm Vince Vora, the head trader at Trading Winds, and yes, I've actually been trading for 30 years. Unbelievable how quickly it's gone by, but it's been a great ride, and it's taken me actually all over the world. I've traded here in the U.S., in New York, Philadelphia, Chicago. I've traded over in Canada, the UK, in Australia, Hong Kong, you name it. It's been a lot of fun, and more recently, I've joined Trading Winds several years ago. And we're real traders, and we are absolutely passionate about teaching. We do develop our own trading strategies and systems, and we teach people from complete beginners to experts around the globe. Now, for those of you who've never had a chance to meet me, this is me here on the left. I was doing a presentation actually for Metastock in Snowbird, Utah, and it's absolutely stunning. If you haven't been, you really should go. It's fantastic, and that's one of the things that I enjoy most about trading is the traveling. It affords me the time, the luxury of being able to afford it, and with my family we go all over the place. This here on the right, recently our most recent live event in Las Vegas, Nevada at Caesars Palace. The gentleman you see standing beside me, that's Raul. He's our coaching coordinator, and as long as we have time, I will bring him on later on to help me answer some questions. But for those of you who haven't experienced it yet, as long as you have a laptop, you can trade from anywhere, and it's not only a lot of fun, but it can be very, very lucrative. So let me tell you about today's presentation. I'm going to not just talk about earnings, but actually show you what I think is the right way to trade earnings. And I'm going to go through three strategies. And number one is how to actually use implied volatility to your advantage. Because usually when it comes to earnings, implied volatility, or the spike that we see in implied volatility, is actually your enemy. It's the thing that goes against you. And I'm going to show you today how to take advantage of that. Number two is how to actually use a strategy that gives you a 10-to-1 reward to risk trade setup. It's a very small investment for a potentially very large reward. And third, but not least, this is actually one of my favorites, how to take advantage of that explosive gain that usually happens after the earnings release has come out. So that's what we're going to cover today, and hopefully we'll still have time at the end to answer as many of your questions as we can. So please remember, trading can be extremely risky. Do not trade with real money until you are completely comfortable with the system or strategy that you are using. So let's talk about strategy number one, how to use implied volatility to your advantage. I'm going to bring up my charts here and walk you through it. Now, when it comes to earnings, it's always good to know ahead of time when that announcement is expected. And there's a couple of ways that I line these up and make a note of them in my journal. One of them is one of the charting platforms I use is Thinkorswim, which you see right here. And these little red buttons at the bottom are the earnings announcements. And they do show ahead of time. And a simple way, for those of you who use Thinkorswim, a simple way to get that is to go into the chart settings, go into the equities tab, and just make sure that you've checked off the show corporate actions button. Once you have that, these will appear here, and you'll know ahead of time why you need to know ahead of time when it's coming. But there's one other resource you can use to help you with that. It's a website. I'm not affiliated with it in any way. I just like using it. It's earningswhispers.com, and my favorite feature is the calendar feature up here. It just lists by date the earnings that are about to be released. So Netflix is on after the market, as is IBM, AMD, etc. And you can move ahead, pick any date in the calendar, and you'll know ahead of time when that stock is going to release earnings, or also search for it. So I think it's a really, really easy site to use, and it's great. Now let's talk about why you would need to know when that earnings announcement is coming up. And you know, the mistakes that I've seen my students make when it comes to playing earnings is, first of all, trying to guess the direction of that earning. And usually, once that earnings announcement is released, you do get a gap in the stock, either up or down. But trying to guess it really is no better than that, a simple guess. Anything can happen. The company can beat expectations, but lower guidance, and then the stock takes a hit when you think it should go up. Really, it's a complete guess. So rather than guess, what you want to do is use the the spike in implied volatility that usually happens heading into earnings to your advantage. Now I'm going to bring up the option chain here for a second, and this is IBM. As we mentioned, they report after the close today. And if you collapse the option chains here in Thinkorswim and you look to your right, you'll see that there's a percentage, an implied volatility percentage beside each expiration date. And when you do this with any stock, you'll see that generally they have an average. And for IBM, it's, you know, high 20s, low 30s. That's pretty much your average. But you'll notice that today's expiration, or excuse me, this week's expiration, is already at 65%. So, and it's not uncommon for these percentages or the spike in implied volatility to go well above the 100% mark. I'll show you a couple in a moment. But what happens is that heading into that earnings, as you get closer and closer, and it usually begins about 2.5 to 3 weeks before that earnings announcement, we start seeing this implied volatility number for the expiration that happens right after that earnings release start to climb. And so if these numbers end the way they are today, IBM will release earnings after market, and tomorrow morning when the market reopens and IBM reopens, this implied volatility number will go back in line with the average. In other words, it will get crushed. It'll go from that 65 back to the 30% range, basically losing more than half of its implied volatility, which means that, you know, if you bought an option here when this was at a 65% implied volatility and it gets cut in half, okay, all that value just goes out the window right at the open. So even though you may have guessed correctly and it gapped in your direction, that volatility crush, that implied volatility crush, completely kills that option. And even though you were right, you still end up taking a loss. And that's the problem. Many people buy a call or a put the day of or the day before earnings, and then they experience that volatility crush, and they can't understand why they, even though they guessed properly and the stock gapped in their favor, why they lost money. Let's have a look at Netflix, which comes out after market close as well, and look at this here, 153% implied volatility. Now, its average is, you know, in the high 50s, low 60s, but still that's quite a jump. So once that goes back in line here, these option contracts are going to lose most of their value early in tomorrow's trading session. And so how do you take advantage of this and not get caught in that mistake? Well, the key here is to purchase ahead of time, or make a note of those upcoming earnings event. And you can see here on Thinkorswim that for Microsoft, it's coming up on Jan 28th. Okay, here's a little red dot ahead of time. So you can make a note in your calendar, or you can use that Earnings Whisperer site, make a note in your calendar, and then 2 or 3 weeks in advance, start looking for a proper setup with whatever strategy you're using. We have 3 or 4 core strategies that we use at Trading Winds, and I'll touch on that in a minute. But once you get that signal, that's when you decide on the direction. So for example, let's look at this previous earnings announcement for Metastock here. And if we go back 2 or 3 weeks, what do we have here? We have momentum swinging higher, and we have a nice strong bullish engulfing bar. So if you had entered here, you would have taken advantage of this nice move higher, okay, which should have made you money in the first place. But since throughout this whole time here, in these 2-3 weeks, the option or the implied volatility was spiking throughout here, your profits are even higher. They're exaggerated based on that. The key is to exit this trade ahead of earnings so you don't experience that volatility crush. That's the key. And yes, it may gap in your favor even more, but you don't know. It's a 50-50 guess, right? So the safe play is to look for that entry 2 to 3 weeks before and then exit that trade ahead of that. So let's look at another example here, one more before we move on. Here's Goldman Sachs. And if you look back in here at the first one from last year, the first earnings announcement, look, going back, same thing. Nice bullish engulfing setup here, and boom, just took off for the next 2 weeks. If you get out ahead of earnings, you don't have to worry what it does, whether it gaps up, down, or does nothing and goes sideways. You've already banked that profit, and in fact, it's an exaggerated profit because of that implied volatility spike. And the other thing to think about is that if you were to purchase here, whether via call or a debit spread, etc., and it started to go against you because there is that implied volatility spike increasing every day, it softens the blow. In other words, your loss isn't as great as it would otherwise be. So the key here is to find that setup early on and exit before earnings, and that's why you want to know exactly when that earnings announcement is about to take place. Let's move on and talk about how to have a 10-to-1 reward to risk trade setup. And for this, what we are going to do is, before I talk about the actual option strategy that you can use to put those odds in your favor, what we want to really do is identify support and resistance. And by that I mean very significant support and resistance. So I'm going to show you a unique way to do that. And I'm going to use Netflix as an example. Now, regardless of what time frame you're trading with, what you want to do with this is move up to a higher time frame, because when you're drawing support and resistance, if you're doing so on a time frame higher than the one that you're actually trading on, what it does is identify those very, very strong areas of support and resistance. Taking support and resistance off the same chart is fine, but moving up to a higher time frame is much stronger. So since I will normally trade Netflix on the daily, I'm going to move to weekly. And then the other thing I'm going to do to make it easier on myself is I'm going to switch the style of the chart from a candlestick to a line chart. And what you want to pay attention to are these peaks or the pivots here, these points, okay? And then you want to take your drawing tool and you just want to identify the zones where the majority of these peaks line up. So for example, here, right around the 115 area, and it doesn't have to be perfect, it's just more or less a zone, but you can see there's this peak and this peak, this peak and this peak. So the rule of thumb here is 3 or more. If you can get 3 peaks on any line or any zone, and of course the more you can get, the stronger that area of support and resistance will be. Another area here, if we look at it, is right around this 104 area. Let's have a look at this. Right in here. So you have this peak hitting there, you have this one, and you have this one. Okay? We'll do a couple more, but what I'd like you to do when you bring up a chart is start from the top and draw these lines from top to bottom wherever you can get 3 or more of these peaks on there. There's another area right in here, right in this 68 to 69 area, right around here, where you can see all of these peaks hitting that same line. And then, of course, right down in here in this 47 to 48 range, right down here. So now, once you've done that, what you want to do is switch back to your daily time frame or your lower time frame, whatever it is, and move back to your candlestick charts. Now, let's have a look at this. Usually what happens when a stock reaches a point of support or resistance is it will either stall for a little while and then bounce, or it'll bounce off it, or it'll blow right through it. Now, you can see how well this works. It bounces off it, it comes back, it stalls again, then it blows through it. When it blows through it, you can pretty much guarantee it's going to the next area of support and resistance. And you can see here, it runs right into it, bounces, runs right into it, bounces, stalls, breaks through it, comes back down, and you can see how well it goes from area to area here. How many times these significant areas of support and resistance either hold. So they can be used, for example, if you're entering a trade here, to look above and see where your next area of resistance will be, so you know more or less what kind of target you can have. Or also, if it's below you, you know where you have some support. So they're very, very key. But we're going to use them in conjunction with a butterfly spread strategy to really put those odds in our favor. So here, let's look at Netflix here. Now, Netflix is currently in this area here around the 106 right now. Who knows where it's going to close? We've still got a little over an hour to go before the market closes. But let's say and assume it closes in this area. One thing you can do, first of all, to judge how far you think the gap can go, one way or the other, is to look at previous gaps and measure that gap. And for many stocks, it's pretty close from earnings to earnings announcement, the size of that gap. It's usually pretty predictable. So you can use that, or you can use these significant levels of resistance and support. So what you would be doing here is looking for the next area of support and resistance in either direction. So in this case, we have this one around 115 for Netflix, above the price. Below it, we don't really have a significant area until down 68. But if we were to take some or draw in support and resistance off the daily chart, there is some right in here around the 96 mark. Okay, so the ideal scenario is when you have a significant area of support and resistance above and below that current price that pretty much matches that previous gap that you've seen, or that range in the past. And what you want to do here is sort of place a bet that one way or the other, it is going to gap into one of these significant areas of support and resistance. And to take advantage of that, we're looking at a butterfly spread. Now, a butterfly spread is a combination of a debit spread and a credit spread that overlap. Let's bring up the option chain and show you why we like to use this. So obviously, we would take the expiration that is right after earnings. Okay, and remember, for Netflix, that 115 area above us was an area of support or resistance. So we're going to go to the 115, and we're going to go to the call side here and put on a butterfly spread. And here's the advantage. This is why you have a 10-to-1 more or less risk-reward scenario, sometimes even better than that. If you look at the cost of this butterfly spread, okay, well, right now it's showing 0, was showing 4 cents and 5 cents earlier. It's going to fluctuate. But you can usually get it for pennies. There you go. There's 5 cents, which means even on 10 contracts, okay, that's $50, and that's your total risk. You can never lose any more than what you pay for that butterfly spread. That's the real key. And here's why I say it's a debit spread and a credit spread that overlap. The long 10 contracts of the 114 and short 10 of the 115s, that would be your debit spread. And then short 115 and long 116, that's your credit spread, and they overlap. That's why you see these 20 contracts at the 115 level and 10 on either side. But here's the key. Let me move this over to the Analyze tab and show you that while we're risking only $50 or $60 on this trade, you can see this cone here. And what this is one side of this is that the lower strike, and then you have the upper strike. So if this stock were to close anywhere between the 114, the bottom strike, and 116 area on expiration, you would be in this zone here, under this cone, and that is your profit zone. If it closes anywhere above 116 on expiration, you would experience a full loss. If it closes anywhere below 114, you would experience the full loss. But again, your loss would be $50 or $60 plus commissions. But look at right in that middle there, right around that 115 strike, your max profit is up here. Now, for Netflix, it's in around the $200 range. Usually, you're going to have 9, 10 times that value. And what you can do is either tighten the range. So if we loosen this range, let's see. Now, whenever you loosen that range, you are going to end up paying a bit more. And you see that it now goes to 10 cents for that range. But what you've done here is increase the range and the probability of this stock finishing within that range, now 113 to 117, anywhere in that range, and it will, you'll be in profit. And you can see doing it this way, your max profit is well over $1,000 here, about $1,200. Okay, so that's the key. So now going back to the chart, if you identify an area above of significant resistance and an area below significant support, and you put on at both ends, that'll cost you $50, $60, maybe $100 on either end for the potential to make $1,000, $1,200. That is the key. That's how you come up with that 10 to 1 reward to risk scenario. Now, a couple of things you need to know about the butterfly spreads. After, when you're close to that expiration date, that Friday, if part of your spread is in the money, you want to close that out. You don't want to get exercised on these, okay? You want to close those out. And if you ever have trouble closing that trade, okay, as a butterfly spread, a quick and easy way to exit that trade is to break it up and sell the debit spread portion as one order and close the credit spread portion as the other. Okay, that's a quick way out of a butterfly spread, but these can be extremely useful in around these areas of support and resistance. Okay, so let's move on here and look at the third strategy. And this is one of my favorites, and this is how to take advantage of those explosive moves that come after the earnings announcement. Let's bring the charts back up. Let me clear this up a little and show you what I'm talking about. Now I'm going to put on a bit of a different layout here. And what I'm putting on here, this indicator that you see here, is known as the Keltner channels. Okay? Let me go into the settings here, just so you can see. I didn't change anything. I'm using the default of 1.5, which is the default on most charting platforms. You can play with this, but I use it as the default. And the rules are quite simple. Here, let me bring up an example for you. Okay? Now, what you want to look at is this gap that happens after the earnings are released. So here we have TripAdvisor, TRIP, and you can let's look back at the far left here at the earnings announcement back in February 11th of last year. So before the earnings were released, we were completely within the Keltner channels. Once the earnings were released, we gapped higher here, and we closed outside the Keltner channel, and that's the key. Whenever you get that close outside one side or the other, it really doesn't matter. If you get that close completely outside the Keltner channel, you then have what we would call a setup bar. Okay? And what you do there as far as looking for a trigger is very simple. You simply wait for a trade above the high of that setup bar. Okay, if you get that, and hopefully it happens in the next trading session or the one following. I usually don't like to wait for more than 2 sessions, because what you're trying to take advantage of here is that momentum move that happens due to that gap. So you want to catch a runway gap, and if it's going to run, it'll do so immediately. So the next bar, maximum 2 bars, you want to wait for a trade above the high. Once you get that, you can go long, and again, you can go along with a call, you can put on a debit spread, you can sell a put credit spread, whatever you prefer. But what you're trying to do is stay in this trade until you get a close, not a trade, but a close below that upper Keltner channel. Now, if you've got a nice runner and you've got a nice profit, you don't want to wait till it comes all the way back and closes below it. You want to start scaling out as you go through, okay? But if you're using just one contract, then you want to wait for a close below that top channel. Here, let's look at this one here, the earnings announcement back in July. You can see we were actually above the upper channel line, and then after earnings we closed below it. There's our trigger, a trade below the low of that bar that closes below that channel. Very next day it happens and it runs. Okay, and you're in this all the way up to this bar here when it actually closed above that upper channel line. So this was your entry, and this would be your exit. Okay, very simple, very clean. Again, you're waiting for a trade either above the high for a move above the Keltner lines, or below the low of that bar on a move below that Keltner line, and you're staying in it up until you get a close in the opposite direction. And that trigger should happen ideally on the very next bar. At, worst case, the one after that. Okay. Let's have a look at a couple more examples. And again, you can scale out and you can use many different strategies with this. Again, debit spreads for smaller accounts, long calls. You can sell put credit spreads down here. And these strategies, these tips I'm showing you today really can work well together. So in other words, if you use that unique way of drawing support and resistance on the higher time frame here, and let's say that you found a strong level of support down in here, for example, and after earnings, this gaps and closes above the Keltner line. Okay, well, a very safe area to sell a put credit spread would be just below that support line. So even if this turns around, the chances of it getting below that support line are much less than they are if you had no support there. Okay, but once again, once you identify this gap, and it doesn't always end up being a gap, but that bar that closes after the earnings are released, a break of that high, and you're in it up until you get an actual close below this upper Keltner line, and it really happens here, this little red bar right here. That's your close. So this is your entry, and that right there is your exit. Okay, we'll go through a couple more examples here. Let me bring this up for you. Baidu is usually a stock that acts very well with this strategy. Right here, you can see, and this is the other thing, this is why you need to follow the rules. Here's this gap after the earnings report right here. But did it ever trade below that low? No, it did not. Certainly not within the next 2 bars. Okay, so you wouldn't take that. If you get earnings, okay, and it remains within the Keltner bars, then you do not have a trade setup. If you get one like this, where it gaps lower, okay, so this one here, right here would be your entry. Well, you can see the very next bar, it did trigger, but then the bar after that, it closed above. So what you'll find with this is that when you catch a runner, you're going to get, you should have a nice size profit, just like here. This one here, gaps here, and it runs. The losses tend to reverse almost immediately, so your losses tend to be much smaller than those gains. So it's just a matter of being patient and waiting for that close above or below that Keltner line, and then that break of either the high or the low, and staying in there until you get that close below one of those lines. Let's look at one more, and then we will move on here. Here's Walmart, and here's another classic example. You get this, it's within the channels before earnings, it releases, closes below. You keep an eye on the low of that bar. It breaches it the very next day, and it takes off. Okay, so, and of course, the more momentum you have in your favor, the better. That's the key here, is momentum. And when you get a gap, and usually it happens with the larger the gap, the better, and then it just takes off. This one here, same thing. And you'll notice that you don't need the full bar to close outside the counter channel. You just need the actual close of that bar to be outside the channel. Okay, it breaches it, and off it goes up until you get that close above, and you're out here. Okay, so your entry, once again, would be here, and your exit would be there. Okay, so I've shown you 3 great strategies that you can start using this week during earnings season. Now, let me tell you about a pro training course that we have that builds on these strategies and teaches you 6 other strategies that you can use not only during earnings season, but throughout the year. This is our Crush the Market with Options Pro Training class. And during this class, I teach you how to create a steady weekly income using credit spreads. I will not only walk you through what a credit spread is, but how to use it, when to use it, under what conditions, and you can do so weekly. Also, those butterfly spreads that I showed you, there are other times of the year that you can use these in a different fashion, and I will explain that in detail. But again, the key here is to be able to make 1,000 plus while only risking 90 or less. Putting that 10 to 1 at a minimum reward to risk in your favor is key, and that's the condition we always use to put on those butterflies. Also, I will go through a couple of different delta neutral strategies that allow you to make money in any market. And really where this is key is when you get those sideways markets where everything's sort of consolidating and not doing much, you get to take advantage of these strategies. And more importantly, I'm going to cover a couple of different repair strategies. So how many of you out there would like to have a few of these under your belt, so that when trades don't go your way, you can not only make back most of that, if not all of it, and turn those losing trades into winning trades. It's a great class. The link for it is tradingwins.com/crush. But let me tell you everything you're going to get before you order, so you know that it's right for you. Once you order, you're going to get an email with a link to the on-demand recording of this pro training class. It's yours for life. You can access it from anywhere where you have an internet connection. And as a bonus, we're actually throwing in a second recording of the most recent live pro training class that we've had. The reason why we're giving you 2 is each one is slightly different, but the Q&A portion of this class, and these courses are, I believe one of them is about 3 hours, or if not over that. They're usually scheduled for 2, but they go longer. So you're going to get almost 6 hours in total here. The Q&A in each one is different. Different topics come up. So there's a lot of material for you to learn and go through. And as a real bonus, we're going to add in a 30-day membership to our pro service. Now, this is a key component of this package. So I'm going to come back to it in a moment and explain exactly what you get with it, because it really is one of the main parts of this package. But altogether, this is a $691 value. But for those of you on this webinar today, and for our friends at Investor Inspiration, we're going to offer this for only $47. We've got 30 of them at this price, just $47. Now let me go back and tell you about our 30-day membership, because this really is the key to this. Our exceptional pro service is the best way to enhance your trading and take it to the next level. We've already talked about how your lifestyle can change when you have more time and more money. So let me tell you everything you get with your exclusive membership and how it's really going to change the way you trade. You get daily updates from us to get you ready for trading the very next day. Our updates come in easy to digest video format. They're in HD, and we know your time is valuable, and we like to get right to the point in these updates. Now, in these videos, you're also going to get unique trade analysis and trade setups for the very next day. You'll be able to follow along step by step and see exactly why and how we're trading using 3 of our core best performing systems. These systems have given us winners for well over 14 years in a row now, and these aren't just your run-of-the-mill trade alerts that you get from other services. These setups are personally handpicked by me each and every night, so you can feel confident that you have over 30 years of trading experience working for you every night. Now, you're also going to get to attend our weekly live chats with me, and this is my favorite part of the pro service, where I get to interact with you directly and answer all your questions about trading. I find that our membership base is also phenomenal. They're not only very intelligent, but they're extremely helpful. Everyone works together, and in addition to having access to my knowledge in these sessions, you'll get the benefit of having hundreds of years of trading experience from the other members as well. So it's the best place to get answers to all your trading questions. Now, I really love these sessions, and I know you will too. And if you can't attend live, don't worry, these sessions are all recorded, and they'll be made available in your own personal video library. Now, as a pro member, you're also going to get discounts to our educational courses and special gifts that we send you from time to time. For example, recently, Thanksgiving, we sent our members a free video course on the secrets of technical analysis, and it was our way of saying thank you to our loyal members. This course was part of a trading event that people actually paid over $2,000 to attend. Now, I love trading, and I really enjoy teaching people how to do this for a living. I've literally trained thousands of traders just like you, and believe me, it makes a big difference to have an experienced trader hold your hand and mentor you through the ups and downs of the markets, especially the type of markets we're in right now. So you get to experience all of this for only $47 for a full 30 days. Trust me, this is not a big money maker for us at all, and I can honestly say I wouldn't be taking time out of my trading day if this was just about the money. I really believe in our service and would love for you to try it. Go to tradingwins.com/crush to get the special. Now, I'm so confident that you're going to get at least 10 times the value of what you're paying for it, that if you're not happy, just call my office and you can cancel anytime. If you are happy, and I'm sure you will be, at the end of the 30 days, you will get a special rate. This will automatically renew at a special rate of $97 per month, okay? And if you don't feel you're getting at least 10 times the value of what you paid, again, you can call my office anytime. We call it the world's easiest cancellation policy. Our goal here is to help you make money, not cost you money. Okay? Now, I see there's a ton of questions, so I'm actually going to ask our coaching coordinator, Raul, to come on and help me read off some of these questions so we can get through as many as we can in the next few minutes. Raul?
Vince, that was a fast-paced presentation. Unfortunately, because of time, we can't get to all the questions. Let me just ask you the most popular ones.
Sure.
Will this work for a small account?
Absolutely. It's actually perfect for a small account because with these strategies, many of them...
Before you answer that, how small do you consider a small account?
Oh, we've had people start with only a few $100s. That's really all you need. Whether you're trading, one option contract or one lot of shares, the whole point is not the amount of available capital. The key is putting the odds in your favor and using those strategies that will keep your risk to a minimum while keeping your upside open.
You didn't mention this during this session here, but recently you had a big trade on CMG.
Yes.
Where if you were a small options player and just played the debit spread,
the credit spread that you would have had a full profit. Sure.
What would have been the investment, and what would have been your return for a small investment?
On a spread like that one, and we did a 10-point wide spread there. We were risking 4 to make 6 on that. But that's a way where you can take a $500 stock, for example, and play it with just $400. How else can you do that? Options are fantastic, and as we've always said, with options, you have options. So it's great.
We're just going to ask the host if they can insert the link tradingwinds.com/crush into the chat. That would be very much appreciated, just for the folks that want to order directly. The other question that always comes up is, how much options knowledge do I have to have in order to get the most benefit from this course?
Well, in all of our classes, I assume you don't have any option knowledge, so I'll walk you through it from start to finish. What I'm really trying to do here is save you a lot of time and those expensive market lessons that come with the trial and error that usually one goes through to figure all this stuff out. So I'm going to save you a ton of time, but at the same time, I'm giving you a ton of content in these and having you walk away with some strategies that you can not only use during earnings season, but any other time throughout the year.
We always get this question as well. What's your favorite strategy for trading during earnings season? I know you had mentioned 3 big ones.
Yeah, my favorite is actually the last one I showed you with the counter channels. That's my favorite for earnings season, but there's so many other strategies throughout the year that you can use with options, and as I said, in this course we go through several of them.
How much of your discussion during the pro class or during the pro training session is on complex strategies like condors or multiple spreads?
We do cover some of that. Again, what I do to maximize the amount of time we have together is really focus on the components of those strategies that you really need. Not the theory, not all the fluff that surrounds it, but hone in on the true parts of it that you need to actually put those trades on and know exactly when and how to put those on, and we'll walk you through it step by step.
A lot of people also ask, when you're trading options, do you also teach them how to place the order for the options and things like that in the pro course?
Well, usually not in the pro course, but this is where that membership portion of this package comes in. During those live chats that we have during the week, you can come into our room and ask me any trading related question. Those are great times for me to walk you through how to place an order, how to set up your chart to look like mine, go through the option strategies, anything trading related. So it doesn't have to be on this course. That's the great thing, is you're not only getting this course and these strategies that I teach you, but during those live classes, you can ask me anything. Any challenge you're having, I will be there to try to help you through it.
That reminds me, we actually have phones here still.
Yes.
1-888-574-2426 if you want to place your order by phone. We'd be happy to help you out there as well. What's your favorite part of earnings season?
The excitement that surrounds it, and those trades that lead into it. Now this year, there's so much more going on in these markets. Things have been so incredibly volatile that they've been very exciting even without earnings. But now that we have earnings season on top, the next month is going to be very, very interesting.
Well, with that being said, that's all the time we have for today. We'll hand it back to the wonderful folks over at Investor Inspiration. I'll let you have the last word.
Yes, thanks again for everyone who joined this again, taking time out of your schedule. I hope you got a lot of value out of it, and I hope to see you at some of our live chats coming up in the weeks ahead. Again, a big thank you to Investor Inspiration for having me back on, and with that, I'll turn it back over to our host.